Hey, good day, everybody. Dennis Wilburn, the Active Trend Trader. I want to welcome you to today's session. It's midweek, so it's time for On the Radar. I got a couple of great stocks to look at. Basically, going to be putting together kind of a thesis on what could happen to the vaccine stocks in the very near future. I think there's some excellent opportunities that will be presenting themselves, but I'm going to save it till the end to show you which way it may go. If you're joining us for the first time and on YouTube, please go ahead and hit the subscribe button and then hit the bell to be notified when we do update. Remember, the active trend trading system is designed for traders who want to basically build their wealth and also achieve financial freedom. That's what I want to target going forward and have done so for the 10 plus years that we've been doing active trend trading. So again, let's go ahead and jump into what we're going to be looking at today. We're a few minutes before the close, and I wanted to just see what the heck is happening with the spiders. A couple of things to keep in mind. One is the way this is acting on the spiders, the way the price action is acting on the spiders is very much in line with what you would expect when the market is potentially going into a correction. Now, how far of a correction? Well, one, we have to realize that from the high here on the S&P, the spiders representing the S&P, down to this initial low right here from the 20th of September, that's only about a 5% move. I did a measurement, basically doing a Fibonacci extension down to this low here, back up to the highs here. Let me find the high. And as you can see, that projects down to what I call this 100% extension. Oftentimes, what will happen is you will get a symmetric move with your, once you start a downside or upside move also, you get a symmetric move because the market tends to go in waves. There's one wave down, one wave up. Now it's on heading back down. Its target from a trade like this is either the 786, which is right there, or the 100%, or the 1272. All of those are valid targets to the downside if we, of course, take out that 50%. Right now, price action is in what we call the magic fib box, which is between the 382 and the 618. We blow out the 50, that increases the probability we'll drop to the 618. And if we blow out the 618, that'll probably provide the impetus and the momentum to take out that swing low there. And then what will we have? We will have a lower swing low. So we will be basically setting up, showing that we have a series of lower lows and lower highs. And that is a definition of what? That's a definition of a downtrend. Now, those downtrends can be short-lived and only last for, several days and or weeks. There's the bell. And so price actions have settled out. There's a lot of stuff. Let's talk a little bit about the actual price action for today because it is quite interesting. On Tuesday, we get a gap down sell-off, strong sell-off down to the 200, down to the 100-day moving average on the S&P. This was a classic move. Sell-off, and especially with a gap down, rally attempt. As you can see on this rally attempt, it fell well short of getting back up to the past highs. And we had drawn that red trend line in last week, and it just basically stuck there for a couple of days and then fell from the sky on Tuesday and Wednesday. Today's price action, let me blow this up a little bit to see if we can get a better picture of this, because it is a classical technical move that you need to be aware of and watch for it in the future. We had a big sell-off day. What tends to happen? We had a rally attempt first thing this morning. Where to? The middle third of that large, significant sell-off day. And then what happens? the momentum reversed and started falling again. So very interesting how that, again, we do need to take out the 100 and the 50% retracement, and then that should set us up for a potential fall all the way down to this level here. You know, I would put, if I was entering a trade, if you entered a trade off today's candlestick, I would look for a potential, you know, you've got the 618 right here and or the 78.6. That would be my downside target. I also like that dotted line there. And so that's what we'd be looking at, you know, that's what we would look at happening. If I did enter a trade, or maybe I want to enter a trade tomorrow, I will be looking for a pullback into today's, you know, upper candlestick and then a reversal. As you can see on the S&P, it is all stacked below the moving averages, all the, well, with the exception of the 100 and 200, but the 8, the 20, the 34, the 50, all of them are directed and going down. That's a great indication if all those, you know, primary moving averages are pointed down. Guess which way our down trend is? It is down. So that's what we have going with that. One of the things we want to take a look at also, we are 1 day away from what? The end of the month. What is the, it is a time to take a look at the, let me get rid of these extensions and all that stuff. Remove bibs. There we go. And I'll remove. Yeah, I'll leave the trend line there in place, the little red one. What's happened? We've broken that longer term uptrend to the downside. If we if we close approximately where we are right now, what do we have on a monthly basis? We have a bearish engulfing pattern. And so as long as the high from the last 4 weeks or 5 weeks is not taken out, we have, again, this is an indication that we may have some additional move to the downside. Where might we go? Well, you know, clearly this level here, the $400 level, but also there's a level of support down here at the 367, 365 level. On the weeklies, we need, or on the monthlies, we also need to be paying attention to what's going on with the TSI. Well, it's rolling over from the upper reversal zone. What's going on with the, I really can't tell anything on the market forecast. Market forecast for the longer term charts is, the green line is not as predictive, but you can look for these two-line clusters that do tend to be a little bit more predictive, especially on the major corrections. So just be aware of, it's time to check your market, check your monthly charts to see what's transpiring. Because again, same thing on the Qs. Qs paint a really good picture. Which way though? To the downside. Look for a potential, you know, we're going to continue to watch for a particular bounce down through the 80 level on the market forecast. Go back over here to the daily and weekly. What do we got going on here? Again, we are continuing to fall. The NASDAQ and or the Qs are actually weaker than and have already entered into at least a intermediate / short-term downtrend. See this? This low here is lower than that low here. We're also getting a close below it. So what does that tell us? Is that basically, as you see with this nice little kind of a hammer type of candlestick, which had a nice long wick, that showed buyers came in. Where? Look to your left, at past support. This time, what happened? Buyers have not come in because we're closing in the lower portion, almost the lower quarter of the candlesticks, look to your left. Is it a level of support? Yes, it is. However, we are very rapidly approaching the 100-day moving average. What was the price action today? Came up into the midsection of yesterday's big red candlestick and reversed off of that. So that's an indication of what? Actually an indication of weakness. Now, could we reverse immediately and jump to the upside tomorrow? Sure. But as I was saying earlier, I would like to put in an alert right there about that level, which is about, I put an alert in about the 361 level on the Qs and look for a potential. Again, the other thing we have going on is what? Do this. Activate it. I can extend this down a little bit further. Now that reflects the longer term downtrend. And so price action can test up against that numerous times. But what else do we have going on? The 8's crossing the 50. Everything is pointing down. And we'll look for a sledgehammer effect on the 100. And we break the 100, stand by. We could be going all the way down to the 200, which is down approximately at the 340 level. IWM, looking a little bit stronger, or was looking a little bit stronger. Let me get rid of my drawings there. There we go. It's still working within its horizontal range, and so how do we want to trade that? How do you want to play that? Well, right now, one of the choices is just stay patient until we get down to where we found support before, which, of course, there's the blue line there. But then there's a couple of other levels, about the 214 level. What is the weekly chart telling, or correction, the weekly/monthly chart telling us? Well, one, the monthly chart is just reflecting, here's a horizontal level that we've been basically moving in the last couple of the last few, actually since the beginning of the year. Because here's February, we moved into it a little bit, first part of January, and then since February, we've been stuck in this range that runs from about, get a number here, and what is that? 210, 70 up to about 210. It's not about the 228 level, all the way down to the 210 level, 211 level. And so we'll just, we'll watch that. Any type of bad news whatsoever is going to basically whack these indexes to the downside. Again, the thing about the Russell and IWM is this trading range, this horizontal, it has become a trading range. So you can, in fact, look to potentially trade that either to the upside or the downside, but it's got to be towards the bottom of the range and then sell it when it gets up to the top of the range. And then if you want to flip out and do the either puts and or the leverage ETF TZA to the downside, you can do that also. So that's what I've got going on for the indexes. As I said, overall, gosh, I hate to say this, but because the Russell is playing footsies here with the 200-day moving average, if we get a close, if we take out the 200-day moving average and drop below this fib box here, that could be a potential issue. If, and I'll just draw this out for you really quick. We go from, there's a swing low there, came back up, failed to get back up to this line here. So we have a lower, in the short term, a lower high. We take out this low right here. Even if it gets down to here, I would project we might get a breakout to the downside. With that said, though, interim-wise, we are looking at the potential of one, getting a market forecast 2-line cluster. The market forecast, the TSI looks like it's trying to hold the 0 line, which is oftentimes a level of support. Again, a failure. Well, also the IWM, the Russell, showed the same characteristics as the other two indexes, came up into the middle third of this big red candle, and then reversed early. Again, now it has dropped back below this cluster. And when, one of the things I call this, when the moving averages like the 8, the 20, the 34, the 50 are looking like this, I call it the spaghetti approach. And so they provide less stable they provide less stable levels of resistance and or support, and tend to be cut through fairly easy, like kind of like hot knife through butter. So that's what we've got going on with IWM. Now let's jump over and look at, here's what I'm looking at, okay, guys? And I'm going to start up with Moderna. Moderna is basically they are one of the, stocks that, of course, is the manufacturer of the shots that they're trying to combat COVID with. And again, this is not a pro or con issue on the ramifications of the shot. What it is I want to take a look at, one, how far have they run? What kind of a pattern do we have been setting up? 3 stocks come to mind, and they are, start here with Moderna. And we'll go back here to October. Let's go all the way back to and when it kind of started its run. And again, Moderna is also, I think it's a fairly, it's a newer stock also. I mean, it came interesting how it came online on December 2018. Is that cool? That cool? Yeah, it is. So they're all 3 kind of newer stocks. Interesting, and or they were, and each one of them has a horse in the race to provide a shot for the COVID vaccine. And just look at how far it's run. And basically, and I'm just going to run this forward to, here's the November time frame. That's when we basically get our crosses. And as you can see, from November, from the low to high, that was a heck of a run. 3,576% run in how long? 670 days. Well, what have the last 2 months been telling us about Moderna? Well, one, that, my friends, is a shooting star. It is a still valid shooting star on a monthly basis. A shooting star is a what? It is a bearish candlestick reversal signal. Would it be a surprise to see, if I'm up 3,500% in a little bit over 2 years, would it be a surprise to have it give back some? I think no. Here's the other thing that's going on here. Both Pfizer and Biointec, their CEOs and some of their management, and also Moderna and NVAX has come out and basically said that, as more people get vaccinated, the less the demand, of course, for their product. So even if they get to the point where, I think that may be one of the reasons why they are working hard on developing the boosters and all that kind of stuff, because guess what? I mean, they like, big pharma likes making money. And so one of the things that we can look forward to is, if the demand for their product is not as great, well, what's going to happen? Well, the value of the stock is going to go down. How far down? We don't know. I don't know what the, but we know without a doubt that the demand for the, even with all the mandates and all that kind of stuff, at some point they will reach the high point where people aren't going to get vaccinated anymore, or it will be just a another type of vaccination. So what's Moderna telling us? One, we could be topping here. What I'm saying, we've got a shooting star that goes back to right there, that's still in effect, and that was on the weekly chart. And what about, let's run over here and just take a real quick peek at the daily chart. Again, this is really pretty. Exhaustion run, pop back down, bouncing around, closing below the 50. And so I would be, so that's one, Moderna. Number two is Biointec. Biointec, we were following this. I talked about this earlier in the year. Biointec also showing a similar type of price action. Now it has dropped below the 100-day moving average. I would look on, here's the way I would be looking to trade this. Biointec, any type of a pullback up into the moving averages, the 50, because these moving averages, let me get my pin out here, are going to basically, if prices keep going down, they're going to continue to fall also. We've had bearish crosses on everything here. On the majority of these, we still need the A20 and the 34 to cross the 50. But I would be looking at any kind of a pullback into the moving averages that are going to be falling. That means we'll catch them at a lower level. I would anticipate, get back to that high and then take something to the downside. And we'll keep watching this. I think we will know more on the weekly chart. Look at a retracement up into the midsection of this week's candlestick. And what does it look like on a monthly chart? Again, what kind of a run did it have from when it went? Whoops, get over the monthly chart here. There we go. From when it went, from when it basically came. So this is actually it. Did its IPO and started trading actually on 2 months to almost the day of when the first reported infection came out of the lab in Wuhan. It also corresponds to almost to the day that the first actual reported case in Italy happened. How far did it run? Well, it ran a blistering, that's a pretty nice run, a little bit over 2,000%. If I take it from the exact low, though, we're looking at about 3,600%, 3,600%. Amazing, hell of a, it's a wonderful, great run. However, what do we have looking at today? Price action, not quite, we'd have to take out this, midsection of this month's, that was July's candlestick. So, but we've got a shooting star corresponding with the same stuff over here. We're moving down. We've broken to the downside. Let me get rid of all those arrows and all that kind of stuff. And then the last stock. And so again, how would I look at potentially trading this? Is basically I'll be just paying attention. I'll check it on a daily or a weekly basis. I'm looking for a pullback back into the moving averages, and then a reversal signal, and then try to jump on that to the downside. Because right now what it's showing us is with a market forecast with a 3-line cluster, the TSI has moved all the way down into almost to the lower reversal zone. It's looking like it could, in fact, do a little bit of a bounce, and that's great. However, as long as the moving averages are not busted or broke, violated, look for that to basically spell something to the downside. And then last but not least, NVAX. NVAX is late to the party with getting their shots out to the general population. It is a more of a traditional vaccine in that it's a preventative, not a therapeutic vaccine. I didn't even know we had therapeutic vaccines. But of course, with the coronavirus, we did in fact change a lot of definitions of what a vaccine means. And in this particular case, what's going on? NVAX continues to basically, well, hopefully it will be approved by the FDA this quarter. They already have targeted to sell it going into next quarter. They may get some of the shots out for the fourth quarter. I don't know. They need the emergency use approval from FDA, but FDA has given them some promising discussion in that anybody who has participated in the NVAX trials are considered basically vaccinated, if you will. And so the thing that's very interesting, and you can actually see it on this chart here, NVAX is another one of those. When did it go public? Well, let's go take a look here. Actually, NVAX has been public for a heck of a long time. They've been developing things. They were running, between not 30, 28 up to, $200. And so they're a drug manufacturer and a developer and all that kind of stuff. But what's very, very interesting, let's just go back to, and again, they started a little bit later than the other ones. We basically broke off. There is November 2019. That's when they threw their hat in the game to get involved with the production of the shots. They took money, and they were having issues. The reason why they didn't come to market as quickly as the other one, they were having some issues with the supply, the supply chain. They didn't have enough materials to be able to generate the quantity of shots they were looking at doing. So what about it? Now, you want to see an amazing run. Check this out. Okay. 9,269% up through 457 days. And they don't even have, they're not, their shot isn't even approved yet. And so what's it doing? We've got a shooting start on the monthly chart. And that was as of when? That was back in February. That's when they first started monkeying with delaying their approval by FDA because of the supply chain issues. And they said, hey, I got to hold off. But now they apparently have got that all in place. Japan has ordered millions of the doses, and a lot of the other companies, they're trying to aim towards the middle to lower financial countries out there. I don't know if that's because they're going to offer it at a lower price or not. And then I would say probably the one thing on NVAX that might be a positive is that since it's more of a traditional developed vaccine, that may help overcome, if our government lets us wait for that to happen, it may overcome some of the resistance towards getting the shot or the vaccine, because it is more of a, like I said, it is a traditionally developed vaccine. So let's go over to the last thing I want to take a look at is the daily weekly. As you can see, it's been driving sideways. We came in, stuck our head up above here. Again, going back into April, we had a shooting star, and then we come down, we bounced, boom. Now that we are moving back to the downside, is we do have a short-term downtrend in place. The TSI, the market forecast, has given us a two-line cluster. The TSI is continuing to push down further. As you see, since the August 2020, as you can see, that's where the market forecast dropped below the 80 line, and has basically not gotten above it except that one little spot right there. And we're just driving sideways. Again, part of the thing, I think maybe the headwind that NVAX faces is by the time they get to market, at least in the US, a significant portion of the population will have had the shot by from one of their competition, especially if the government mandates and their, if the U.S. government goes the way Australia is going right now, let's just face it, life in the U.S. is going to get really crappy in the very next few months. So hopefully they won't. Hopefully they will respect people's freedom to make choices from their own, because, hey, we know that there are treatments available out there that would combat this. And so, okay, that's what I've got for today, guys. I hope you kind of like that scenario. We'll probably went a little bit over what I would normally do, but I wanted to make sure that you got it here first. No, take a look at those potential entities. There we go. Take a look at those potential downside opportunities on the vaccine companies. Again, has nothing to do with the vaccine itself. It's just basically the laws of supply and demand. And when the demand starts to diminish, and I would anticipate that once we get to that point, the demand is going to diminish really, really quickly. And so each one of those companies may provide us some really excellent downside opportunities, especially if you didn't get to play on the opportunity to the upside. So we'll just watch those, and we'll keep our eye on them. Premium active trend trader and trading members, you guys will be keeping that on the radar. So we're on the radar today. This is Dennis Wilburn, the Active Trend Trader, signing off saying aloha. God bless everybody.